Okay, I think we can start. So good morning, good afternoon, and good evening. And thank you very much for participating to the ICS Stakeholder meeting. For those who don't know me, I'm Paolo Cadoni. I'm the chair of the IIS Capital Solvency and Filtration Working Group. And I would like to welcome to this important stakeholder event. Next slide, please. Next. So we would like to talk to you about what we have done. Just to give you, first of all, a brief recap of the monitoring period, where we are and what firms are required to report during the monitoring period, and also what happened during the last year, but also gives you a flavor of the changes for the year that we propose for the year toward the monitoring period, which is currently with firms for completion of templates, and then provide you an update on the comparability work and have 30 minutes for Q&A. If necessary, we'll stop between different slots. We go by slots and ask if you want to submit questions then. But moving forward, before getting into the details, a few housekeeping details. Just to remind you that the call has been recorded and it will be later posted on the IIS website on the ICS part under stakeholders event. If you want to send a message, you can send a message to the host via the WebEx chat function, and please do so if you require assistance in respect of your video audio connection. If you need to ask a question, or if you would like to indicate that you need to ask a question, please use the Q&A function of WebEx, which you can find at the bottom right-hand corner of your screen. You need to click on the arrow besides Q&A. This will open a dialog box, and then which you can then type a question or indicate that you would like to speak. Please send your questions indication to all panelists, please. And now, just to give you a recap of the first year of the monitoring period. So, where are we now and where is the process with respect to the monitoring period? Post Abu Dhabi, we moved to a different stage of the ICS project, which is called the monitoring period. The purpose of the 5-year monitoring period is to monitor the performance of the ICS over a period of time, not the capital adequacy of IIGs. And what is quite important is that during the monitoring period, ICS results will not be used as a basis to trigger supervisory action, and also ICS results are not intended for third-party reliance. What is also important to remark that the monitoring period is a period of stability for the reference ICS and the additional reporting, which means it is a period where we would like to test a stable version of the ICS over a business cycle to assess whether it produces intended results. You know, the fact that it's a period of stability, however, doesn't preclude for potential clarifications, refinement, correction of major flaws or unintended consequences. And all of it is intended to improve the ongoing development of the ICS. But what are the reporting requirements during the monitoring period? We have two sets of requirements. One is what we call confidential mandatory reporting, which is about the reference ICS, which is based on the market-adjusted valuation basis, a standard method for the calculation of capital requirements, and converge criteria for qualifying capital resources. And additional reporting at the option of the group-wide supervisor of the ICS with another method derived capital requirement, for example, internal models or dynamic aging, or a different valuation basis like the gap with adjustment basis, which is most commonly known as gap plus. And as I said before, the ICS during this period will not be used to trigger any supervisory intervention. In addition to these reporting requirements, there will also be discussion at colleges of the reference ICS and any additional reporting. And supervisors will provide feedback on the ICS, and this feedback will be used to, again, improve the ICS. We also provided guidance to group-wide supervisor and supervisory college through the form of dashboards with key data and key information. And this process will go on for 5 years up to 2024. And after that, there will be decision on what is the final form of the ICS that will need to be implemented as a prescribed capital requirement. But going to what happened over the first year. The first year of the monitoring period was launched in April 2020. And during this period, we had monthly call, recognizing the difficulty of the pandemic. We had monthly call with volunteers group to discuss the exercise and progress being made and difficulties found during the exercise. And on top of that, we also had the Q&A weekly process. Again, due to COVID and recognizing the difficulties and the struggle of some firms in competing demands from supervisor, the submission deadline last year was extended from the end of August to the end of October, and this aimed to provide operational relief to volunteers group. Despite the extreme challenge of the current pandemic, 39 volunteer groups participated in the exercise. And over the years, we aim, and this year we will have an increase, we already have an increase in participation, and we're continuing to encourage participation from firms across different jurisdictions and business models. Why? Because we wanted to ensure that we adequately monitor the performance of the ICS, and once the ICS will have to be implemented as a prescribed capital requirement, it is fit for purpose. And what's most important is the IIS supervisor remain collectively committed to make participation as large as possible, as set out in the Abu Dhabi Agreement. Material for supervisory discussion of the ICS was provided to group-wide supervisors in December 2020. This is between October and December, the IIS performed all the necessary analysis of data in a similar fashion to what we have done last year, but this time performed by the IIS, and then were submitted to the group-wide supervisor in December. And as I said, and as an additional information during this monitoring period, the IIS has for the first time received feedback resulting from discussion among group-wide supervisor and supervisory college about ICS performance. This substantial and helpful feedback will contribute, and has contributed even for this year revision, to further improvements and planning for the monitoring period. What is quite important to remind that one of the main aims of the ICS, which is to create a common language for supervisory discussion of group solvency of international active insurance groups, i.e. the IAIGs. And this is to enhance global convergence among group capital standards. What we learned from COVID-19 and from the pandemic? The COVID-19 pandemic highlighted the benefits and reinforced the need of having a common language to facilitate effective supervisory discussion of group solvency. And it provided a valuable lens through which to assess the performance of the ICS and evaluate the importance of a global insurance standards in a period of stress. To better understand the potential impact of COVID-19 on ICS performance, the IIS also collected a stress balance sheet based on actual holdings at the end of March 2020, along with the end of the year 2019. What I mean is, if you remember that the first year of the monitoring period effectively was supposed to collect data end of 2019. But because we wanted to maximize the data received and the benefits from the data received, we also collected data at the end, a stress balance sheet at the end of March 2020, which already captured information and the preliminary impacts of the current pandemic. And this further observation from stress condition have provided valuable information for further refinements, potential refinements of the ICS. As I said before, I mean, despite all the operational challenges in 2020, the first year of the ICS monitoring period proved to be successful with strong participation and engagement from groups across the world. And participation, as I said before, has already grown in 2021 with additional insurance groups participating. And the first ICS discussion among group-wide supervisors provided, as I said, valuable input and will further enhance the ICS development. What is important is the IIS is committing to delivering an ICS which is fit for purpose by supervisor by the end of 2024. And just to remind you even further about what the typical monitoring period or how the monitoring period works, let's have a look at this slide. So effectively, what happens here is around January, the IIS, based on the experience from the previous year, start thinking about potential changes and correction of major flaws or other additional data that needs to be collected over the following year. Around February, March, this revision gets approved by our parent committee, and we prepare then the revised technical specifications and templates. The exercise typically is launched around April, as we have done this year, and firms have between end of April and end of August to complete the templates and questionnaires. After that, the IIS and its members typically analyze the results, and everything happens via the group-wide supervisor. So firms submit their data via the group-wide supervisor. There is a bit of interaction between the firm and the group-wide supervisor, which may lead to some data revisions, and then this data is uploaded at the end of August to the IIS website. As I said, in September, the IIS continue the data cleansing process and start processing the data, providing an analysis on data. And then around these preliminary results get discussed by parent committees, then data gets submitted. The IIS prepared the dashboards for supervisory college discussions. Supervisory college discussions happens between typically mid-October to end of December, and after that there is a global roundtable of supervisors which discuss their experience with the ICS, and the feedback gets provided to the IIS, and this leads to further changes to the ICS. I think we got some questions about changes that we have done this year, but I think we're talking about them following up. So I think, Stephen, you'll get the answer to your question just now as we move through. So this is in a nutshell an update of what we have done so far on the monitoring period works, but I'll now let Gilbert to take you through the changes that we have made for the year 2 of the monitoring period based on the experience of the first year. Gilbert, thank you very much. The floor is yours.
Thanks, Paolo. Okay, so in this section, we will explain the changes made for year 2 of the monitoring period. Now, what is the purpose of the monitoring period? The purpose of the monitoring period is to monitor the performance of the ICS over a period of time and not the capital adequacy of IIGs. For this purpose, the monitoring period is intended to be a period of stability for the reference ICS and additional reporting. This does not preclude possible clarifications or refinements and correction of major flaws or unintended consequences identified during the monitoring period to improve the ongoing development of the ICS. The following slides will highlight recommended changes that is related to the clarifications or refinements and correction of major flaws or unintended consequences to the reference ICS for year 2 of the monitoring period. So if we go to the next slide. Relating to the valuation component of the reference ICS. This year, we have refined the formula for the calculation of the middle bucket spread adjustment to avoid unintended consequences found in last year's design, such as, firstly, situations in which the spread adjustment decreased when the matching ratio increased, and secondly, situations in which a spread adjustment greater than that for the general bucket was granted, although cash flow matching could not be maintained up to year one. We have shown in this slide the updated formula for the spread adjustment for the middle bucket. So if we go to the next slide, please. For the capital requirement component of the reference ICS relating to natural catastrophe safeguards, safeguards 2, 4, and 5 have been clarified to indicate that models required by local regulations may pass these safeguards if certain criteria are met. And on equity risk, we have corrected the calculation of negative stresses, and the scenarios are now flawed at 0. For the next few slides, I'll pass to Sandy to continue.
Thanks, Gilbert. And I'm Sandy Schaefer from the Federal Reserve, and I'm the Vice Chair of the Capital Solvency and Field Testing Working Group, for those who don't know me. So I've got a couple slides here on tax. Basically, what we did was based on some of the feedback that we received and some of the confusion, I think, in this year was really kind of the first year or the second year that we've tried out a tax approach. That there were some just refinements that we had to make in the specifications on that, both around the balance sheet and also on the calculation of the deferred tax asset utilization on the ICS balance sheet. So I'm not going to go through the specifics of that, but essentially, these are not design changes; they're modifications to the specifications so that they are more clear and followed more consistently. So next slide, please. Same for the tax effect on the capital requirement. There were some things that we did to try to improve the clarity of the specifications. Just one thing I would point out on the tax effects on the capital requirement, there is some acknowledgement that there may be more work to do on this part of the calculation. To date, we really have not found any elegant solutions where the ICS is calculated at a group level and the tax effect is best evaluated at the jurisdictional tax level. We've done a lot of outreach in this area, and there may still be some more work to do going forward. Next slide. So just to keep you up to date on what's going on with GAP Plus, we kind of have two batches or two groupings of volunteers. The Japanese GAP Plus approach is currently subject to the monitoring period and will continue to be. The results of the GAP Plus under the monitoring period would, of course, be subject to discussion in supervisory colleges and with feedback being provided by the group-wide supervisors. And we would expect the same treatment as the reference method ICS. For US, IFRS, and China GAP Plus, they remain subject to field testing this year. There was some significant changes in accounting for US and IFRS, and the China GAP Plus approach came to us a little later on, and so is more new. Therefore, we extended the field testing timeline out to 2021. We'll have to take into account what data we've received and also just the timing of the effective dates of the accounting rules, and we'll reassess that at the end of the year. The testing objectives for this year are to continue to look at US GAAP and the impact of the accounting rule changes for long duration insurance contracts. if there are any refinements to the China GAAP Plus approach, and then we're still in the design and evaluation phase of the IFRS approach, as the effective date for the IFRS 17, which is the insurance contract standard, has been delayed significantly and continues to hamper our efforts around designing a GAAP Plus approach for IFRS. So I think I'm passing along. I can't remember who's next, but Martin, I believe.
Yes, it's me. Thank you, Sandy. Hello to everyone. I'm Martin Hahn from the Secretariat, and I'm going to give you a short overview on the supplementary data collections. So the first one is the alternative balance sheet, which is this year intended to capture kind of a post-COVID-19 pandemic world, which is done such that groups who report a year-end balance sheet should use end March 2021 economic conditions to restate their balance sheet. And those groups which report end March their balance sheet should use year-end 2020 economic conditions. And on an optional basis, volunteer groups can also report their risk charges in these alternative scenarios so that we can see what's the impact of changing economic situations over this COVID-19 time. The next one is two types of supplementary data collections on the middle bucket. For the first one, we changed the eligibility criterion 135D, which asks that the market value of assets is greater than the value of liabilities discounted using the risk-free rate. And for this supplementary data collection, we replaced the risk-free rate by the general bucket yield curve, so that the market value of assets that backs the portfolio is greater than the value of liabilities discounted using the general bucket curve. And for the second approach, so normally the middle bucket is applied on a currency level. So there is one spread for one middle bucket portfolio for one currency. And the second supplementary approach is allowing several middle buckets in a single currency. So there can be more than one bucket in one currency, and thus there can be more than one spread in one currency. So what we replace is that the middle bucket spread adjustment is portfolio specific within a single currency and not currency specific. And now I hand over to Aurelian.
Yeah, thank you very much, Martin. And hi, everyone. I'm Aurélien Cosma from the ICS Secretariat, and I'll give you a very short update on the supplementary data collection on infrastructure and strategic equity. So as you may already know, the IIS has undertaken since last year some work in order to determine whether it's appropriate to have a differentiated capital treatment for infrastructure and strategic equity within the ICS. And as part of that work, we decided to include this year into the ICS confidential reporting package a much more comprehensive supplementary data collection on infrastructure and strategic equity as compared to previous years. So in the past, we merely collected data on exposures, so the invested amounts in infrastructure and strategic equity. But for this year, we have added line-by-line reporting for both infrastructure and strategic equity assets, also with data on qualitative characteristics as well as volatility of those individual assets. And we will also collect some data on historical defaults of infrastructure loans and bonds. So in the end, those data will help us assessing whether it's appropriate or not to incorporate a differentiated treatment in the ICS, and if yes, under which conditions in terms of definitions and criteria in order to determine which assets are eligible, and also with what level of calibration. So we'll get both qualitative and quantitative information from that data collection. So yeah, this is it for that short update on that part of the supplementary data collection. And I will now hand over to Danita for the end of this presentation. Thank you.
Thanks, Aurelian. And for those that don't know me, I'm Danita Padamore from the ICS Secretariat. And just before we conclude and move to the Q&A part of today's presentation, I'd like to inform you that the public ICS data collection package will be released later this month. And in that release, we will have the technical specifications, the template, yield curves, and the questionnaire. As has been described today from our various presenters, there were some changes that were incorporated into the technical specifications this year. As such, we've also prepared an errata for the level 1 and level 2 documents that were previously released, as the changes did have an impact on the text for those documents. So the errata will be coming out at the same time. And of course, this is all in addition to material that's previously been released, the level 1 and level 2 documents already available on the ICS portion of the IAIS website. And one more quick update to give you before the Q&A is the update on the work we're doing on the comparability assessment between the aggregation method and the ICS. So as you know, although not part of ICS version 2.0, the US and other interested jurisdictions are developing an aggregation method to a group capital calculation, which, if deemed comparable, will be considered an outcome equivalent approach for implementation of the ICS as a prescribed capital requirement. We did a public consultation on the definition of comparable outcomes and high-level principles. That consultation started in November of last year and concluded earlier this year in January. In May, we published a resolution of comments document. And right now, the work is already underway on drafting criteria. Those criteria will be informed by the high-level principles and the feedback we received from the consultation process. The consultation on the draft criteria is scheduled to take place in the fourth quarter of this year. So I think that concludes the formal part of today's presentation, and I'll throw it back to Paolo, but we're now happy to answer any questions you might have. So please use the Q&A box at the bottom right of your screens.
Thank you very much, Danita. So do we have any questions? Any questions?
Not seeing anything in the Q&A. If you do have any questions, please let us know. If you would prefer to ask one, you can send a note in the Q&A and we can unmute you. Okay. We have a question coming in from the chat on, and the question is, I guess, a good one for Martin. What is the middle bucket?
So, okay, the middle bucket. For the ICS, discounting is split actually in 4 parts. There is one very specific part where cash flows, liability cash flows can be replicated by a portfolio. those parts can be valued using this value of assets which replicate the cash flows, and all the other liabilities which cannot be replicated are either discounted by putting them in the top, middle, or general bucket. And roughly speaking, top bucket means a very high predictability of cash flows and a very good matching of assets with liabilities. And in addition, some other eligibility criteria, so premium cash flows and things like that. But it's mainly that predictability and also kind of matching declines when going from top, middle to the general bucket. For the top bucket, you can earn 100% of the spread that's coming from your portfolio that backs those liabilities. Middle bucket, it's 90%, and the rest then goes to the general bucket where you get 80% of an spread that is not volunteer groups portfolio specific, but is computed as an average spread that's earned by the set of volunteer groups in a specific currency. Was this sufficient detail?
Thanks, Martin. Are there any other questions?
I see a question from Martin Hansen about the planned ICE, if we have any further information about the impact assessment and so on. And at the moment, the answer is no. But well, with the discussion will resume shortly. And I mean, it is planned for to start, I think, Q3 of 2023, if I remember correctly, Anita.
Yes, I believe so. It's around the same time that the public consultation on the ICS as a PCR will be launched. And that's Q3 2023.
Any more questions? Can't see any more questions. Please don't be shy. Got something on in the chat. I think this question is for you. Sunday is about GAP Plus.
Can you read the question? I can't see the question in the chat.
The question is, the GAP, does the GAP only apply in accountability?
Does the GAP only apply in what?
I think probably you need to explain what the GAP Plus is all about.
Oh, okay, all right.
So, in tax. Actually, he's saying if the gap is Omar is not about gap, is a gap with adjustment. I think probably you need to explain a bit what gap plus means and what is the philosophy underlying gap plus.
Okay.
That probably may help.
Okay. So very early on in the development of the ICS, it was decided to also look at a second valuation approach based on some of the concerns that market value approach may not have the level of transparency and accuracy that a GAAP audited financial statement would. And so the idea was to take audited GAAP consolidated financials and make minimal adjustments to that to achieve some level of comparability, so that we could use GAAP statements as the basis for the an alternative valuation approach for the ICS. And so we went through the process of identifying some of the major accounting regimes. So we have GAAP plus approaches for US GAAP, US SAP, IFRS, Japanese GAAP, and China GAAP. And so there are adjustments that are made primarily to insurance liabilities and some other things that are kind of consistent with the MAV approach, where we're adjusting for things in capital resources, that kind of thing. And we've been testing the GAAP plus approach alongside the reference method or MAV approach for the past 4 or 5 years. And a couple of those approaches are nearing completion. The Japanese GAAP plus approach is in the monitoring period, and a few of the others are on their way. And then the last one that we have, IFRS GAAP plus approach, has been a bit of a we've had some issues with that around just the fact that we lack data to really test it, because the effective date for IFRS 17, which is the accounting for insurance contracts, has been delayed year after year. I think we're up to 2023 for an effective date, and so it's made it quite difficult for us to test that approach. So we're still struggling and trying to figure out how and if we would include the IFRS approach in GAAP plus. So that gives you hopefully some background as to what we're doing and why and how.
Thank you very much, Sandy. I think we got the next question is about that, about the implementation of the importance of the consistent implementation of the ICS monitoring period, and what steps will the IIS will take to ensure consistency of implementation. So, I mean, let me start to rehash, and then I'll pass it to Roman to provide a bit more details on that. But the reason why we're taking 6 different field testing exercises and 5 years of monitoring period is because we want to make sure that actually that we produce and we develop an ICS which is fit for purpose and is appropriate to capture the different type of business models across the world. And so with this hope, we hope to be in a position also after having completed the impact assessment that this standard gets implemented in a consistent manner across jurisdiction. But we are on the policy development stage, but post implementation, the IIS, and I'll let Roman from the IIS explain a bit more how the implementation of ICS gets monitored over time of different IIS standards, not only about the ICS. Roman?
Yes. Yes. Hi, everyone. I hope you can hear me. So obviously, this is a very general question to us. Of course, the IIS is very much interested in the fact that our standards are implemented in a way that is consistent. This is not a new question or a question specific to the ICS. This is something that we are doing. We have an implementation assessment committee, and we have implementation and assessment procedures. So at the moment, we are currently reviewing the implementation of other type of standards like ComFrame and the holistic framework. And in the future, once the ICS would have been adopted as a prescribed capital standard, then of course, we will turn our attention to assessing the implementation of the ICS as a standard. So how we are going to do that, of course, that depends a little bit on what will be adopted as the ICS. But if you want to get a sense of, for us, the importance or efforts and the way we are assessing how our members are implementing our standards, I can only refer you to our website and look at what we are currently doing for the rest of ComFrame and the holistic framework. Thanks.
Thank you very much. We got also a question from Morag about the stress balance sheet. And in terms of what type of information was collected with the stress balance sheet. Important that, when we were preparing the technical specification for last year exercise, if you remember, the last physical meeting that IIS had was around February. So at that particular point in time, we thought about how can we make the exercise a bit more helpful, because we have, for example, end of December. If we collect information at the end of December, we will have, and with some firms also having end of the year in March. If we keep these two firms, these two sets of firms misaligned, you will see that in the 2020 exercise, you will have a balance sheet for which the preliminary effect of the pandemic had already come in. For example, from Asian firms would have been potentially impacted if they had the balance sheet ending end of March, whereas those firms which had end of the year December would have not had any impact on the balance sheet. So what we decided to do was trying to make the exercise helpful but not a burdensome to firms. We asked those firms which had the balance sheet ending December to produce also data with their balance sheet ending in March, and those firms which had balance sheet ending in March to produce approximation for the results end of December. So by do that, so I think we can compare firms on a like with like, but also we could also have got some preliminary information about the pandemic. I mean, bear in mind that one of the purposes of the monitoring period is also to have a 5-year period, so that where we would have expected to have a significant stress event to test the performance of the ICS. So we have this significant stress event, and is more likely to come even further with the end of the year 2020 balance sheet this year. So this is quite important. So this year, compared to last year, we will have a better view on the results, and we'll be able to compare end of 2019, so pre-pandemic, and end of 2020 with the pandemic, and hopefully end of 21 will be the end of the pandemic in terms of balance sheet experience, and we'll be able to test the performance of the ICS.
Maybe Paolo, if I may just add something on that.
Yeah,
I think it's also very important to remind everyone that this is done with the purpose of assessing the performance of the ICS. So looking at how the ICS react to such a shock. So it's really to feeding our work as part of the monitoring period. So this is distinct, separate from the other type of work that we have been doing with the COVID-19 targeted assessment, which relied on the GME platform, where we collected data with the view of assessing how the pandemic has impacted the global insurance sector. But that are two different data collection exercise serving two different purposes. And with what we have done with the stress balance sheet was really, as Paolo has said, within the objective of understanding how the ICS reacts to some different situations to see a little bit what was the the sensitivity and the impact on the ICS calculation. But really, when it comes to the work that we have done and that we have also shared with the public with the COVID-19 edition of the GMAR, this was done through another data collection exercise, which is the based on the GME. Thanks.
Yeah, and to clarify just what Roman said. Now, it was about monitoring the performance of the ICS, not the performance of firms during the pandemic. That's a different type of exercise, and also, with a view just to some extent to reply to what Martin answered before, to provide additional information which may be helpful for the future impact assessment of the ICS. Okay, I think we got another question. I think we saw from Sompo. It was about participation rates, and I think the question was, if I can summarize that, you had 39 firms in the sample, and the number of IAG is much larger than that. Are you expecting to have the full population this year? And as I said, we are having an increase in participation this year, but we still will not have the full sample of IAGs. But we hope by the end of the monitoring period to get something closer to that. Any more questions, Danita?
Yes, there is one other question. Has there been any discussion so far among the IAIS about a possible extension of the monitoring period, given the confusion and turmoil caused by COVID-19?
Quite important here to underline that the reason why the monitoring period is 5 years, or was designed to be 5 years, on top of the previous 6 or 7 years of field testing, depending on the way you count, which is already an enormous development period, was about testing a stable version of the ICS, so that and the 5 years was deemed to be appropriate to be able to capture a significant stress event. So theoretically, if you look at from that perspective, the fact that we had the stress event at the beginning of the monitoring period, it is quite important for the success of the monitoring period. Yeah, and I will let Roman to add a bit on that, but we have provided last year additional relief to firms to complete their templates, but we are not planning to change the date of the monitoring period for the reason I stated before.
Thanks, Paolo. No, nothing much to add. I think, of course, this could have been a question, I would say, in 2020 when we saw the development due to the COVID-19 crisis. I think one of the things that we are showing to you today is that we have been able to actually have a very fruitful first year of the monitoring period. I would like to thank all the volunteer groups that have provided data. We have extended the timeline for that. We have also given the possibility to rely more heavily on proxies, etc. But at the end of the day, I would say we have been able to collect input from them, data from them. We have also been able to collect input from colleges of supervisors. So with that, I mean, the first year of the monitoring period has been a very efficient and effective one. That's also something that we have been showing you with the changes that we have made for the next year. Again, this was a very open question we had that when we start with this crisis, how are we going to manage the crisis, provide operational relief, etc. But I think it has been this process has been resilient, and again, this is today really a moment to take stock of what we have been able to do. And with that, there's no current discussion about extending the monitoring period. Thanks.
Any more questions?
Yes, we had one follow-up question, but I think Roman covered it in his response on whether there was a formal request to extend the monitoring period. And at this point, the answer is no.
Yeah, I think both questions were on the same topic, effectively.
Yeah. And then we have another question about whether there's been discussion among the IAS about recognizing Solvency II as a European implementation of the ICS.
I think there's not been discussion of any recognized Solvency II as a European implementation of the ICS. We are developing the ICS, but the implementation discussions will happen later on, and the IIS doesn't dictate what people should, they dictate the implementation of firms. The IIS sets the standards for implementation. Then it's up to jurisdiction to look at the standards provided by the IIS and decide on the way they will have to implement these standards. And of course, the IIS later on, as it came in the previous question, will assess whether the implementation undertaken by member states, but by different jurisdiction, is compliant with the standard. Have there been changes to instruction to colleges as a result of year one? We don't provide instructions to colleges in the first place. We provide two sets of information to help drive their discussion and to provide a bit of more kind of a consistency in a structure to the discussion. We provided a dashboard. By a dashboard, we mean some key information with respect to the ICS solvency ratio of a particular firm over the year, and then we break that down into the different component of valuation, capital resources, and capital requirements. We lay down a set of questions. So we provide a comprehensive set of slides, and effectively that's what is the dashboard. But then it's up to the group-wide supervisors to decide what gets discussed into colleges, and they can provide additional feedback in addition to the type of question we set out to set out to them. Any more questions? Any more questions? Danita, can you see any more questions on your side?
I do not see any more questions, Paolo.
Okay, last chance to ask questions. If not, then I would like to thank you very much for your participation and for the helpful dialogue during the stakeholders event. As I said at the beginning, the slides and the recording will be posted on the IIS website under stakeholders events. So you will find it, I don't know exactly when, but you'll find it over the next few days there. And so thank you again for your participation. I look forward to meet you at the next stakeholders meeting, and more specifically, I look forward to meet some of you at the next virtual meetings in June, about the seminar, the global seminar. So in between now and then, thank you again, and bye-bye.